Good morning, you guys. I am super uber excited today about today's episode. For those of you that are new to my channel, my name is RoQuanda Guy, and I am here today with RoQuanda's Real Estate Real Talk. I am super excited about this episode. Why? Because we're talking about entrepreneurs. During the pandemic, a lot of people lost their jobs. Sorry. During the pandemic, a lot of people lost their jobs. They really did. And they had to find ways of making income. So a lot of people use the pandemic as a time frame to find their passion and become an entrepreneur. But becoming an entrepreneur is not always easy. So once a person starts down that avenue and they realize that they want to now become a homeowner, do they have the finances? Do they have the income? Do they have the documentations to help them to successfully become a homeowner? We're going to discuss that today with my special guest. Stay tuned because you don't want to miss it. You guys, I am going to bring on my guest. I am super uber excited that he is here with me today. I am sharing the platform with Alex. So Alex, go ahead and take it away and tell my guest who you are.
So as you said, I'm Alex Cockrell. I'm one of the loan officers and the owner of ASC Mortgage Group. We are a brokerage that work with about 9 to 10 different lenders to find solutions for your clients and borrowers with all different scenarios and walks of life. I have over 10 to 15 years in the finance industry, so I definitely am really good at figuring out solutions and really good at problem solving for almost any scenario in the buying industry if you're looking to buy a home currently.
Awesome. I love that. So Alex, tell me, I brought you on today because during the pandemic, a lot of people lost their jobs. They had to start finding income somewhere. So a lot of them dive into their passion and decided to become an entrepreneur. Okay. So today we're talking about helping entrepreneurs become homeowners. Okay. So tell me, is this even possible for a homeowner to become an entrepreneur to become a homeowner?
Yes, ma'am, definitely.
It is possible. I like to hear that. Okay, so tell me, does it matter if they have an LLC, a corporation, or S Corp? Does that matter?
The answer to that question is kind of yes and no, but there's an avenue for all walks. So there's an avenue to get their deals done for every single one. And honestly, even if they're, simply 1099 and they don't have an LLC or an S Corp, they can still get financing.
Awesome. So even if they don't have an S Corp or LLC and they have probably a sole proprietorship or they receive a 1099, they're still possibly eligible to become a homeowner through your company and being able to find a loan for them. That's what you're saying to me.
Yes, ma'am. That's correct.
All right, perfect. So is there like a time frame that a person need to be incorporated or have been self-employed or an independent contractor before they can actually apply for a home loan?
So every scenario is different. So the answer to that question is for a typical vanilla straightforward mortgage, the answer to that question is yes. There is a time frame, and that would be 2 years. Consistently 2 years of having some type of self-employed income. But there are still options for people that may have just started to become self-employed or have been self-employed a little bit of a shorter time period.
Okay. So my next question is, a lot of times entrepreneurs, they don't always pay themselves because they're just starting off. The first 2 years are really, really hard for an entrepreneur. And sometimes they're being paid cash through Zelle or PayPal or even the new app, Cash App. How does that work when you're trying to get financing for a home loan?
So how that's going to work is the one thing I got to always tell people is, you don't want to just accept Zelle, Cash App, or Cash even and not document it. You always want to have some type of paper trail. So definitely create ledgers. You want to keep an invoice. And that way it's got to be for the exact amounts of, for your services. So that way I can tie the story together. We just have to be able to make the story make sense. So if you get, if you charge a client $20, make sure you give them an invoice and a receipt for $20. So that way on said date, if I say, hey, what's this $20 transaction? You're going to say, here's an invoice for said client for $20. So that way when I go to the underwriter, I can say, this is how it makes sense.
Awesome. I like that. Okay, so I'm an educator as well as being a realtor, so I like to recap. So we are saying that it is possible for an entrepreneur to become a homeowner, especially if they take Zelle or PayPal or Cash App, as long as they are giving their customer client a receipt and you're able to tie those things together to show proof of income. Is that correct?
That is correct. So ideally, in an ideal situation, what happens is an underwriter will see a transaction like that and they'll kick it out, because what happens is how do I tie, the fact that you have a Cash App from Alex Cockrell? How do I know he's just not lending you money? So you have to make sure, like I said, to be able to tie it together. So if you give an invoice to said client, they acknowledge the invoice for that amount, and it's on a specific date. When the underwriter asks me questions, I can say, here's the documentation to prove this is what for services rendered.
Awesome. Okay, great. That's all absolutely amazing information. Now, my next question for you is just a recap too, is that a person should be in business for 2 years if they are an entrepreneur. But I have a question. Say, for example, again, it's just an example. I have a teacher and she taught for about 10, 15 years. And during the pandemic, she decided that she didn't want to go back inside the classroom. So she decided to start her own tutoring business. So even though her tutoring business is only a year, how can we tie, if we can tie her years of service in public school now to her entrepreneur business as a tutor, if that's possible?
Okay. So the hardest part in this industry is getting financing from somebody who's going from W-2 to self-employment. So like I said, for a straightforward deal, something straightforward, very vanilla, if they've been in it for 2 years and so forth, that's a very easy deal to get done. But we do have programs for people that are self-employed. With a lot of these lenders now, they're understanding that people are self-employed. They've only been self-employed for 1 year. There's sometimes, write-offs on tax returns and so forth. They're starting to be a little bit more understanding to those people. So they have introduced a lot of different programs where we can tie everything together to be able to get them financing.
Awesome. Sorry about that. Okay, so my next question would be to you is that if a person does have the paper trail, they've been an entrepreneur right at the 2 years, but they have not filed their taxes, or they filed their taxes, but we know with entrepreneurs that they sometimes don't tell it all because they don't want to pay taxes. I know, I'm not saying that I know anybody that does that. I'm just simply saying. So how do they work around showing proof of income when they don't show it all so they won't have to pay so much in taxes? I'm just saying, just hypothetically, I'm not saying entrepreneurs do that, but just in case, how would you deal with a situation like that?
So one, I'm not a tax professional at all. So, but what happens is the first way I approach it is I actually ask the client for their tax returns. And I want to look at the tax returns because sometimes there's certain write-offs we can actually add back into their income. Some people don't really know that, but there are some things like depreciation, for example. That's one write-off that we can actually add back in. And then we have other programs such as like bank statement loans. And then we even have a program where there's honestly no documentation required, where we're actually able to be able to get clients such as entrepreneurs that got that exact 2 years but don't show the income, quote unquote, to be able to get them financing.
All right, so let's dive into it, because I know there's so many different programs out there for an entrepreneur, and because entrepreneurs don't fit in that typical box.
Yes, ma'am.
How would you start off? What type of programs do you offer? Okay, let's start off there. And then what would we look at for a credit score would be my next leading question after we talk about the different programs you have. Or maybe those programs all offer a different credit score. So tell me more about it. I'm going to give you the full mic.
Okay, of course. So first, there's like a bank statement program. So the minimum credit score, ideally, you're going to want to be around 640. So with the bank statement program, what that does is we actually take your 12 months bank statements. And once we get those 12 months bank statements, we actually look at your deposits over those 12 months and we average it out. And that's the income we would use to get you qualified. So we have that program. Now we do have another program where it's actually, we don't even identify your income. And that program, ideally, you're going to want to have a credit score of about 680 to 700. And with that program, we don't really even identify income. It's just simply verifying the assets.
Oh my goodness, I couldn't get back onto the screen close enough or soon enough. So you go ahead and repeat that one more time. And what does that look like if you don't even have to verify the income?
So this specific lender, it goes off of your credit score. They're going to go off your credit score, and then there's assets. So we're going to look at things like making sure you have 12 months reserves and so forth. So you know that's for a specific set of clientele that does have a certain amount of assets and so forth. But there are, like I said, avenues to get things done, and there's also, you know, you're able to get a gift and ways to get around that as well.
And when you're talking about a gift, I know what that means. But for my viewers that probably do not know what that means, what do you mean by receive a gift? Because I love gifts.
Okay, so what I mean by a gift is if you have a family member, a close family member that's willing to assist you with purchasing your home, and they're saying, hey, you know what, I had this amount of money saved. I'm happy to help you to get you to the finish line and becoming a homeowner. They are able to give you that $10,000, and we can use that towards your assets in purchasing your home.
Okay. And I have a question. What about those individuals that have been working for years on a W-2, and now they're either being forced out because they refuse to receive the vaccination, or it's time to retire and they're just trying to relax? How does that look now that they're going into network marketing or real estate or something else and becoming an entrepreneur? How would that look for them? What would that process look like, so that if they are looking to go that way, should they try to get a home loan before they retire? You know, is it possible after they retire with their self-employment? What would that look like, Alex?
So that's a loaded question, but it's definitely case by case. But like I said, we do definitely have avenues for every client. So one, realistically, we may possibly want to look into getting the financing prior to retirement. But also what comes along with retirement a lot of the times are things like pensions or taking money from your 401k or even Social Security. So those are avenues we would explore as well. And then, like I said, if they're starting to become an entrepreneur, as we discussed prior, we do have a program like the no stated income, where we can actually get them done depending on the asset level.
Awesome. Another question someone said on Facebook is, what do you consider to be SS? What do you consider that to be for income purposes?
Okay, so that's actually a good question, because what we consider to be assets is either one, a gift that has been in said person's account for at least 60 days, or funds that have been in your account for at least 60 days. We can also use retirement products as assets. So this has to be sourceable funds. And when I mean sourceable, the money can't just have came in. You made a $15,000 cash deposit. When we look at that, If you just made it, those aren't going to be considered assets, quote unquote. So we had the funds do have to be sourceable, and it has to be in the account for at least 60 days.
Awesome. At least 60 days.
You got it.
And if it's not 60 days, be able to show proof of a paper trail of where it came from. Is that possible?
Absolutely. Correct.
Okay, so if my grandfather wants to give me $10,000 and it has not been sitting in my account, I can just show proof that that was given to me from him. Or if I decided to take it from my 401k or pension right before, I guess right after I retire, I have this money now, and I now have this money inside the account.
That's absolutely correct. Everything has to be able to tie together. You got to be able to have that paper trail. These procedures are federally regulated, basically to prove that you're not money laundering.
Okay, perfect. All right, so we know that there's different types of loans out there. You have the FHA, you have VA, you have conventional, you have so many, that we don't even talk about the jumbo loans and stuff like that. What do you consider to be the best loan, if any, for an entrepreneur?
I mean, it's case by case. Every scenario is going to be different. So I wouldn't say there is a best product specifically for any entrepreneur, because everybody's situation is going to be different. Like I said, every tax return is going to be different. Every level of income is going to be different. Every debt to income ratio will be different, loan to value. So it's going to be a completely case-by-case scenario. What I would like to do is honestly just give every client a mortgage consultation and go from there.
All right. With consultations, I'm just going to go ahead and I'm going to just put your phone number across the banner so they can reach out to you. So you guys, this is Alex's phone number. Alex shares an office with us in our West Palm Beach satellite office. Him and his staff is there. Please come by and see me, see Alex, see what your options are. Write down his phone number. Now, another question that came in, Alex, was if you're going to receive a gift, if it's best to receive that in a check or have them to wire the money to you, or do they wire the money directly to the title company?
So when receiving a gift, actually all three are options. There's no best way. Like I said, all three are an option. We could do it prior to closing. You could receive a check. You could have the money wired into yourself. But we do have to be able to source that account. So whoever is your gifter has to be willing to give us their bank statements to be able to show us that they had those funds in that account and that they did send it out to you. So we would need verification. The easiest way that I always tell clients is just wire the money to the title company on the day of closing. That way, it's not switching 3 or 4 pairs of different hands.
Awesome. All right. Another question, Alex. If you are a retired veteran, how would that look for a VA loan for an entrepreneur?
So again, we would do a consultation, but realistically, I mean, with veterans, they usually have all sorts of pensions and retirement funds that are coming in. So we would just analyze, their scenario against what incomes they have. And you can still do VA as long as you do have the VA eligibility.
Awesome. And what is your company's origination fee? And what is an origination fee?
So our company we have a processing fee of $400. That is our only fee. Sometimes an origination fee can come in the form of points, or there could be like a third-party fee involved if there's third-party companies involved with processing a file. So those are the biggest avenues of an origination fee. But our origination fee is $400.
Okay, so for someone to use you as their loan officer, your fee would be $400, regardless if it is a $90,000 loan or a $1 million loan, or does that vary depending on the income? I mean, the amount that you're purchasing.
So it's $400. Our processing fee is $400 no matter what. Now, there are going to be different, again, it's case by case. So there may be a file, depending on the way the file is structured, there may be like points or something involved. If there are points involved, then it's going to go up a little bit. But, realistically, is if it's a very straightforward deal, that $400, that is what comes to us.
Awesome. And I'm going to bring you back so we can have another talk about points, because a lot of people do not understand the discount points and what that even means. I'm telling you, I just got my broker's license last week. And that was on the test. And I was like, wow, I didn't know this much when I was a sales associate. So I'm really excited to be able to explain discount points and how that benefits. But that's another conversation we have to schedule so people can understand what it actually means. All right. So I know I've taken up all of your time, and I promise you not to go over 30 minutes. So just one last pitch. I have people from everywhere that's on this channel listening or will go back and listen to it. Tell me, there's so many different loan officers out there. There's so many different banks. There's so many different companies. Why should a person use you?
Communication is key to me. Throughout the entire process of the loan, I make sure to stay completely in contact with the client, the listing agent, and the buyer's agent. Everybody has my direct cell phone number. I really don't ignore calls, whether the news is good, bad, or indifferent. I'm really good at problem solving. And like I said, I just make sure to stay in complete communication with all parties on the file. So that way we can definitely get from point A to point B very smoothly, and it's a very easy transition in getting people into their dream homes.
I like that, because I don't do drama. And I love to communicate very effectively, and I like a smooth process. So I like everything that you said. I know this was supposed to be the end, so let me know if you can answer this in a few minutes. But what happened if an entrepreneur actually wanted to purchase an investment property? Right now, Airbnbs and homes are very popular. Is it possible to use one of your programs to be able to buy a income producing property?
Yes, ma'am, of course. We actually have a program as long as the client is putting 25% down and has a credit score of 640. We don't even verify the income. What happens is there's an appraisal that's done, and it's called a rental appraisal, where they analyze what the average rent in the area of that home is. As long as that rent covers the principal and interest of the mortgage, we can get this deal done very smoothly in about 20 to 25 days.
Wait a minute, you just said something that was simply amazing. I don't know if people just heard what you just said, but repeat what you said. Let's hit rewind. Okay. Rewind. What did you just say?
So I actually have an investor program where we don't even have to verify income. So there's something that's called a rental appraisal that's done. And so the appraiser is going to analyze the average rent in the area of the home you're purchasing. And as long as that rent covers the principal and interest of the mortgage you're getting, we can get this deal done in about 20 to 25 days, very easily.
With 25% down.
25% down, yes, ma'am.
Okay. And when we talk about 25% down, for those that's watching, that's your 25% down. That does not include your closing costs and all your other things, because people sometimes tie those together. Those are completely different things, but it's still possible.
Yes, ma'am. Absolutely.
It's absolutely amazing. And I'm really excited about that. All right. So I'm just going to check really quickly. I'm looking through a couple of pages to see if there's any questions that I did not miss. And I think that's it. Is there anything else that you would just like to tell people that are entrepreneurs that I didn't even think about asking you, Alex?
I think we basically covered everything. But honestly, if there are any questions, like I said, I've got a lot of knowledge in this industry. I've been doing this for 11, 12 years, as I said. And you guys have my direct cell phone. I'm happy to give a consultation to anybody. If I don't know the answer, I'm sure I can get it very quickly. So just give me a call.
Awesome. I am really excited about you being here with us and taking time out of your busy schedule to join us on RoQuanda's Real Estate Real Talk. And you guys, please reach out to Alex. I always tell people all the time, the best thing that you can do is have answers so that you can make an informed decision. There's no way you can make an informed decision without having all of the answers, and you're able to put it out on the table and be able to compare apples and apples and oranges to oranges and make the best decision for you and your entire family. You guys, this interview is just coming from a point of informing you, because I know how it is to be an entrepreneur and really want to become a homeowner. So if there's anything that I can help you with, if there's anything that Alice can help you with, you guys feel free to reach out to us. We're only a phone call away.